Great Sauble Conservation Authority Full Authority meeting Wednesday, March 26th. And I'm going to just read the today's acknowledgements. We acknowledge with respect the history, spirituality, and culture of the Anishinaabe, the people of the Great Fires known as the Ojibwe, Odawa, and Potawatomi Nation, who have inherited this land from time immemorial. And further, give thanks to the Chippewas of Saugeen and the Chippewas of Nawash, now known as the Saugeen Ojibwe Nation, as the traditional keepers of this land. We also recognize the Métis, whose ancestors shared this land and these waters. May we all as treaty people live with respect on this land and live in peace and friendship with all its diverse people. I will say that I just recently joined the OPP detachment board, and I had to do it feels like I was back at school. Thanks, Tony, for that, by the way. It was rather late in the day, so I literally crammed all those courses into about a week, and that was so it was like being back at school. But anyway, yeah, there was a lot of really interesting information on the human rights angles and the Indigenous rights angles, and I found it very, very informative and if not eye-opening as well, which is sad but true. But it was well worth it. Not that anybody wants to take this course, but really wants to go over some pretty salient points about what's going on. It was quite illuminating. Anyway, moving on the agenda, point 2, disclosure of pecuniary interest around the table. Seeing nothing, thank you very much, knowing you can fully disclose at any time. Point 3, call for additional agenda items. And seeing nothing, so call for the adoption of the agenda. I move that the Great Sauble Conservation Authority Board of Directors approve the agenda of March 26, 2025. I have a mover and a second, please. Member Bell. Thank you very much. All in favor? And that's carried. Thank you. The minutes of February 26, 2025. We move that the Great Sauble Conservation Authority Board of Directors approve the full authority minutes of February 26, 2025. Again, I have a move and a seconder, please. Vice Chair Dubik and Shaw, thank you very much. Any questions or comments or omissions or errors? And thinking?
Did you get my comments on these minutes? I think there was a few lines where like they were just missing the rest of the sentence.
On these? We'll get Valerie to examine and we'll apply that.
Absolutely.
Perfect. Thank you, Mr. Shaw. All in favor as will be amended.
Okay.
All in favor? Thank you. Moving on to business of minutes. Anything, nothing at this time. And so we'll move on to the consent agenda. I'll move that in consideration of the consent agenda item listed on the March 26, 2025 agenda, the Great Sauble Conservation Authority Board of Directors receives the following items. 1, environmental planning, section 28 permits, February 2025. Point 2, administration, receipts and expenses, February 2025. Point 3, conservation Ontario council minutes, September 23rd, 2024. And point 5, recent media articles. Does anybody have anything they would like to pull from the consent agenda for discussion? And seeing nothing, the mover and seconder, please. Member Farmer, thank you. All in favor? And that is carried. Yeah, you're 1/3 of this rate. Moving on, we do have a presentation today from Mike Kanaka, TD. Look forward to that. Thank you. Okay.
Did the owl just hoot?
Yeah,
Yes,
and just came back on.
Good, I'm not hearing things.
Never heard.
I think we're back now.
Good to go. All right. Good afternoon, everybody. Thank you for having me to your meeting today. It's always nice to come and see you all on an annual basis. Today I have a presentation outlined for us to go through. Hopefully you've had a chance to maybe take a quick peruse through it, but if not, that's what I'm here today to do. This page down, like to, anything fancy on it?
You're able to just click the mouse there.
Oh, okay.
And the mouse. Maybe?
Yep.
There.
Okay, wonderful. Just a little bit of a reminder of my team. I've been overseeing this mandate since we started the relationship back in 2015. I have my two associates, Laura and Saba, as well as we have a nonprofit specialist who is a resource that I have access to that I can bring into relationships. She's a national office resource we have at TD Bank, but very much involved in the nonprofit space on all the types of mandates that TD overseas in the nonprofit world. So she can bring some great perspective, help out on a number of different areas, such as creating your own, firm investment policy statement, and many other things. So I just point out that it's a resource that you have access to, and we'll be happy to engage her if you saw any need or benefit. So today's agenda, I always like to start with an overview of the investment policy statement strategy parameters. So, what are the parameters that we're managing this portfolio within? We'll touch on performance, asset mix, bit of a market update, kind of titled something, how to defend in this market. It hasn't been all that bad, so I wanted to point out some areas of opportunities. What our strategic asset allocation positioning is, what our recommended, way to be positioned in this environment, and just some concluding remarks. So as far as the investment policy statement, think of that as the goalpost that we're allowed to operate within managing the funds on behalf of Great Sauble Conservation Authority. So I just indicated the current portfolio size that we're overseeing. It is about $5,000 higher today than the printing of this last week, so that's good news. But the key overriding mandate from an investment objective perspective is obviously capital preservation. So how do we maintain the purchasing power of these funds against obviously inflation, which has been something that we've experienced in the last 2 or 3 years, and also provide some long-term growth as well to help fund future projects, asset replacements, just operating costs needs of the organization. The investment profile is what we call balanced. So again, we have different investor profiles. We established the parameters for this mandate. We determined a balanced approach would be appropriate. So, what that means is, for lack of better, simplistic ways, like we're gonna half your money in fixed income or safety and half your money in growth. But we do have a range that we can operate within that growth bucket, anywhere between 35 and 65%. Currently, we're at the very bottom of that threshold, and that's as a result of a decision last December to raise some money in anticipation of your needs coming up this year with the building renovation. So that was a call that you imposed on us. It's not where we would recommend you be, but because of your circumstances, it was determined that it was appropriate to have some additional funds put in safety. So once those funds, ultimately leave the account, the asset mix will most likely revert back to what our recommended mix is. But because we're sitting on that cash right now in the portfolio, it has you at the very bottom of our asset allocation range for equities. We would determine this a moderate risk profile. So on a 12-month basis, you could experience a 5 to 10% downside. We did have a couple of years like that, 2022 being the last year where you would have experienced something like that. I've just, given you a long-term expected rate of return for a portfolio like this, 5 to 6% net of fees. We have a medium to long-term time horizon. I know you've got some money set aside for a short-term purpose, but outside of that, the strategy does have a longer-term focus. Under liquidity, I just indicated that we're maintaining extra liquidity to help fund the administration center renovation. And we've also been using one of our responsible investing strategies on the equity side of the portfolio. So, and I just noted the asset mix change that was made back in December, where we basically moved an additional $500,000 into our investment savings account. So our report card to you, performance. Again, this was as of last Thursday. Trying to hit the highlights that are in green. Just looking at the most recent 12 months performance, the portfolio did have a rate of return just in excess of 10%. So despite the volatility up until last week, you know, on a 1-year basis, the portfolio still performed quite well. Obviously exceeded our target, but that's on a 1-year basis. As you look down to your since inception rate of return, we're settling in that mid fours at 4.54 as of last week. All these are after fees and expenses. So on the low end of where we would want to be, but recognizing that we're sitting on a little extra cash, that, you know, that is a bit of a drag on the portfolio, but understand your circumstances and it's prudent to have that extra cash on hand. And just wanted to point out, like, even despite the volatility in 2025, we still had a positive rate of return of just shy of 0.4% in the first 2 months of the year. So, all in all, not too bad in my opinion, but more is always better, but I think we have to keep it in perspective of your risk tolerance as well. Just wanted to refresh your memory on asset mix. We talked about the higher than normal cash position that's sitting in the portfolio. And then you can see our allocation between fixed income and equity. We have more of a North American bias to the strategy, underweight international markets, but certainly overweight Canada and North America. We feel that is the safest place to be positioned on the equity front right now. So that might change, but that's reflective of our views at present. I think this is a good kind of reminder. This is just looking at the last 5 years of the S&P 500 market performance, kind of starting at the beginning of the pandemic, because we've been through lots of ups and downs during that last 5 years, and kind of just a validation of staying invested. But, you know, if you were to start on the far left, kind of January of 2020, you know, the market's experienced almost a 30% drawdown on the onset of the pandemic, a very sharp sell-off. Then we went into almost like a year and a half recovery, all the stimulus that was injected into the markets, people coming out of their houses again and starting to spend. Markets did quite well. Then we got to the point where inflation was becoming an issue and interest rates started going. So we had a 25% drawdown over a, 15, 16-month period. And then the most recent period in the fall of 2022 to present, all this excitement around artificial intelligence and what that's going to mean for the world and just what the markets have done. So if you were to just go from the far left to the far right, markets have done really well, but in between there's been lots of volatility. So what I'm trying to get at is, despite that, and these are just broad market indices, the FTSE bond market, the S&P 500, which is a broad measure of U.S. equity performance. TSX 60 is the Toronto stock market experience, so that's Canada. And then EFI is Europe, Asia, Far East. If you look at your 1, 3, 5-year, 10-year numbers, like despite the volatility we've had, this is why you stay invested in equities if you're looking for long-term growth, because you're going to have periods of panic and uncertainty. But I think it's just good validation that, if you're committed to a long-term strategy, you will be rewarded for it. But there's going to be periods of uncomfortableness. And we're kind of going through one right now with all of the, feels like a global tariff war that we're starting into. I just wanted to also point out, market corrections, what's normal, what's not normal. But again, just referring to the S&P 500, for the last 50 some odd years, we typically have a 5% drop or more 3 times a year, and it tends to last about 46 days. You usually have a 10% drop or more 1 time a year that lasts, better part of 3 months. We have experienced a 10% decline. It happened in a really short period of time, in a matter of like 3 or 4 weeks. So the period of that sell-off recently in the S&P 500 and the NASDAQ was sharp, but it's not out of the normal. So I think people are, when we go through a period of calmness, you kind of forget what markets normally do, but what we experienced isn't out of the abnormal. It just feels different. Every correction is usually a result of some bad news out there. In this case, it's everything that's going on with geopolitical concerns and tariffs and so forth. So I do want to say the sell-off is nothing out of the norm. It just might feel that way because everything else that's going on, of course. So how do we defend in this market? I mean, your fixed income allocation is still an attractive space. So what we're showing here is just different bond markets. So the Canadian bond universe, which is a makeup of corporate, provincial, government bonds, you know, just Canadian federal bonds, Canadian provincial bonds, and what their range of the yield has been on those different types of bonds going back the last 15 years. And in most cases, across all different types of bonds, we're at the mid to high end of what the yields are. So there are some attractive yields to be had in the fixed income space. So it's certainly been a nice diversifier to have in the portfolio. And, you know, if you wanted to hide out somewhere, you're going to get decent compensation from being in different types of bonds, you know, kind of towards their higher end historical range. Part of that is because we went through a interest rate hiking cycle by many central banks, and they had to deal with inflation. Interest rates are starting to come down lower, but there's still some attractive returns to be had in fixed income. So one place, and you benefited from having some exposure there. It hasn't been all bad in the equity markets. We're just looking at the different sectors of the S&P 500, again, the broadest indice measure for US equities. And there are pockets of the market that have done quite well in this environment. And this was again as of up to March 11th. But if you go to the right-hand side, you know, energy stocks, materials, which is, you know, base metals, gold companies, real estate, healthcare, consumer staples. Defensive areas of the market have done relatively well. You know, most of the sell-off has been really isolated to what we call the Magnificent Seven, but a lot of those AI stocks that did really well over the past 2 years. And had become such a large portion of the S&P 500. That's where a lot of the air has come out of the market. So again, it's easy to kind of have this negative connotation that it's been terrible. It hasn't been. There have been pockets of the market that have done well, and it just speaks to having, you know, diversification has been your friend. And we're starting to see the market broaden out a little bit, which is a good thing. Infrastructure. We don't have as much infrastructure exposure in the portfolio as I'd like, and it's something, you know, we'll talk about towards the end. But when we just look at, this is what's kind of looking at the worst quarterly returns over the past 15 to 20, not 15 years, compared to what private infrastructure assets have done. Infrastructure holds up really well when you have volatility in global equities. So, the one thing that when you're in private markets, they're not as liquid. It's something I've spoken to about in the past about wanting to have a little more exposure to private asset classes, be it private equity, private real estate, private infrastructure. It's something I'd like to talk further with Tim and Allison about. Once I have a clearer picture as to what you truly need for the building and what will then become the remaining funds that we can manage on a longer term basis, I would like and would recommend we start to incorporate some private market exposure into the portfolio. Again, they're not as liquid, but they generally have quarterly liquidity, so it's something that we can manage. We have a good understanding what your needs might be. But again, just wanted to point out that it's an asset class that tends to do well when we have kind of volatility. So if I can help build a better portfolio, these are the tools that I'd like to start to incorporate into the portfolio if it makes sense from your perspective. Just wanted to again, this is where our current positioning is. Again, it's not necessarily reflective of what's going on in your portfolio currently because you've kind of overridden that with the request to hold a bit higher level of cash, and I understand the needs for that, but we wouldn't normally be sitting on a high level of cash. We would normally be slightly underweight fixed income, but overweight corporate credit. We would be a little bit overweight equity markets, mainly North American, underweight international and emerging. But then in the alternative space, we would be kind of overweight commercial mortgages and private debt. You have some of those in your portfolio, but we don't have infrastructure, global real estate, or real estate assets, which I think could be a nice component to have in your portfolio. We do have a little bit of commodity exposure in the portfolio. Commodities tend to do well in this environment. So again, there's some of this is reflected in your current strategy, but some of it's not. And I'd like to talk to you further, or at least Allison and Tim, about incorporating some of the other ideas that we would normally like to see in your portfolio, if it makes sense. Concluding remarks. I don't know how many times you see the word uncertainty in the news nowadays, but that really is the only certainty, is just this uncertain environment that we're in. Can't really tell you how it's gonna play out. Guess you can look back to periods in the late 1800s and the 30s when the US embarked on kind of a tariff war. I don't think it ultimately ended up in their favor, and the tariffs were ultimately removed, but we'll see if that plays out. There's so much that is yet to be determined, but we'll have some more information on April 2nd. But the biggest risk is that all this uncertainty starts to paralyze, business confidence, business sentiment, consumer sentiment. People stop spending, businesses stop investing, and you kind of propel yourself into a recession. And so you're already seeing companies not sure what to do. People worried about their job. Housing market is suffering because you can't make a big purchase if you don't know if your job's safe. So that's the biggest risk right now. So hopefully some of this uncertainty peels off in the next little while. And otherwise, if you stay in this environment long enough, the recession is certainly probable. It's not our base case, but it's becoming more likely we're headed that direction. But we're not in a position to say for sure that's exactly what's going to happen. It's hard to project out too far, but we just know the risks are rising. But we're not quite there to say it's going to happen for sure. But it feels like it is, but it could change on a dime. We know that growth slowing. So again, being in bonds, some of the other asset classes that I spoke to is a good place to have in your, good things to have in your portfolio. We talked about the real estate and even a hedge fund strategy. These are some of the tools that we have that I can incorporate in the portfolio that would help isolate you from some of the volatility. But in the meantime, I think you're in a good spot. I mean, at least you've got the cash set aside that hopefully, if it changes that you need more, I mean, you'll have to communicate that to me. But at this point, hopefully that is at least earmarked and safe and accessible for when you need it. And then maybe we can start to incorporate a few of these other ideas into the portfolio. So with that, maybe I will have you take some questions if anybody has any. Thank you.
Excellent. Thank you very much for the presentation. It's actually very nice to hear a calm voice in all of this noise that's kind of going on out there. And you're right, it literally can change daily, let alone over periods of time. So thank you for that, and I will throw it open for questions. Member Shaw.
Thank you, through the chair. When you talk about private real estate, infrastructure investments, are those say alternative funds backed by mortgages or what have you that are
Yes.
kind of outside the traditional assets that a investment advisor would put you in an indexed fund or something?
Yes, you hit on a couple of things. So first of all, they're private, so they're different than publicly traded markets. So they don't trade on a stock exchange. They generally are in a fund where you own a basket of the underlying exposure. In the case of infrastructure, it could be wind and solar projects.
Okay.
It could be pipelines. It could be toll roads. Think of the bricks and mortar of what drives an economy. That's kind of what infrastructure assets are. So we actually purchased a company a number of years ago that has expertise in managing and running an infrastructure and real estate fund. So it is a TD run solution. And their responsibility is to go look for those opportunities and you buy into that exposure. In the case of real estate, it could be multi-residential, it could be office, which has been challenging, but is recovering. Think about warehouse and logistics, which has been a good space to be in. So it's a broad, diversified portfolio of either real estate infrastructure assets, geographically diverse. So the biggest thing is they're not as liquid, so you just can't sell a toll road if you need liquidity. So we have a mechanism that allows clients to get out and into the solution on a quarterly basis. So it's fairly liquid in that respect. We also have some third-party run mandates that are, that have been vetted by TD, that are run by some rather large US-based institutions with a long, solid track record of managing, for example, private equity, which is private companies, just companies that don't try to trade on the publicly traded markets. And the private market's actually bigger than the public market. So it's a huge subset of opportunity that, you know, we think clients should have some exposure to. It would be no different than, you know, what you would see in a major pension plan or foundation. They're continuing to increase their allocation to those kind of private markets. They tend to behave differently, help reduce the volatility and kind of enhance your return. So yeah, I can get into more details on the underlying strategies, but that's generally how they.
Any other questions? Mr. Dewey?
Thank you, Chair. So thanks for coming in today. It's always good to see you. I just wanted to confirm where our portfolio size is kind of leveling off. Because right now we're at 1.8 million.
Right.
We have 500 in cash that we will be taking out in the near term. So that'll bring us down to say 1.3 million. Just want to confirm, are we expecting any more like kind of chunky withdrawals or inputs in the next 12 to 24 months?
No, I wouldn't say so. So we have about 600,000, just over 600,000 in the high interest savings account. And we'll be looking to probably pull the majority of that. We have some of our reserve funding is not held in this portfolio as well. And we'll be drawing from that as well. So I don't see us going below about 1.2 in the portfolio right now at this time.
Okay, that's helpful. Just as we think about strategies and how complex we want to get for like, you know, a 1.2 million
Yeah.
Portfolio. So, okay.
No, we can easily accommodate some of those other strategies with a portfolio that size. So they can be incorporated in that level of.
Okay, thank you.
Mr. Member Al?
Thank you, Mr. Chairman. The one screen we had, about bonds,
Yes.
global, Canadian, provincial. So in our total portfolio, we only have a small portion of the bonds.
About 30%, I believe, is in portfolio.
Yeah, so a bond from the federal government. The federal government goes to the central bank to help the entire nation move forward, ask for money, then they have to pay that money back with interest. And then the government says, and the province says, if you buy bonds, we'll give you some money, because what they're doing is they're taking that other money to come in to help pay back ultimately the original request for borrowing money. That's sort of the basis of a bond.
Well, like, there's a good chance they have to issue new bonds to refinance the ones that are coming due unless they have the cash to outright do it in their coffers.
Yeah.
I can't speak to whether or not the federal or provincial governments have a ton of cash on hand, but generally they refinance, meaning they'll issue new debt to refinance maturing debt.
Yeah, so the security on a bond is, it says there's an amount of money. That's the security of a bond.
Your security is the underlying issuer. So in the case of a federal or provincial bond, unless you had a really pessimistic view that they weren't going to be able to repay it, it's as close to like a risk-free investment. When you move into maybe non-sovereign debt, other countries that might not be as financially stable, or even in the corporate bond market, you potentially increase what's called your credit risk. Is the credit worthiness of that borrower solid? And that's where we have to do our homework to make sure that if we're going to buy a bond from a particular corporation, that we feel confident that we're going to get our interest or principal back.
So then, just as an overview on the effect of us in our portfolio having bond, we still feel that is a really solid spot for a corporation here to have that good amount in that bond portfolio.
We think bonds is part of a diversified portfolio. I mean, it's not going to be a wealth creator for you, but it's going to help you during times of volatility, and it will help generate some, stable income.
Yep.
But again, going back to the objective, if we're just, again, if we're looking for a 5 to 6% rate of return, we can get some of that exposure from bonds, but we're obviously going to need some asset classes that generate 7, 8, 9, 10% to be able to get you your total of 5 or 6. So, yeah, it's still an asset class that has some attractiveness to it.
Okay.
But it's never gonna be something, unless we have much higher interest rates, it's not gonna be an asset class that's gonna be able to create wealth, but it'll be there as a cushion of all of them.
Yeah, thanks.
Well,
Any other questions? Seeing nothing this time, thank you, Mr. Knopka, for the presentation.
No.
Moving on, the agenda, point 8, business items. Under administration, we actually have two motions that are two points that are coming up, A and B, that are somewhat related. So Tim had said earlier that we might actually hear Ian's presentation and Tim's both, and then actually move motions, because they are totally related and will have direct impact. So let's start with Ian.
Sure. I do not have a presentation here for you. Basically, it's gonna be going over the same information that was presented in the letters of recommendation from the architect and the staff report. We received through the tender process, we received 4 bids. I'll admit it was it's fewer than we'd expected we might get, given the turnout that we had for the mandatory site meeting. But there were some very good bids in there still, and some of them, it was still a success there. We're happy with it. The architect reviewed the bids sort of first. They discussed it with GSCA staff throughout. Of the 4 bids, there actually was only one of them there's a number of little items, different pages that need to be signed, different things. There's only one that actually had everything in it, all the boxes checked. But the missing information was very minor on the other 3. It wasn't enough to throw a bid, even though technically you could. They were very expensive, but just worth knowing, Allen Hastings was the one that had everything included in their bid. So as you can see. The architect then reviewed the relevant experience. Have they done projects, of this size? Have they done projects of this type? We have some sort of mass timber in some of our style. Through that, then Hastings and JP Commercial were deemed having that experience with the project for the size. Other items that were looked at that point were the project length, because each bid also included the project length that they were expecting, as well as the overhead and profit percent on any changes that happened. And then also they had some alternate price items that they had submitted. So all that was sort of taken into account and looking at that. And then ultimately the tender results on the bid prices were reviewed. And of the 4 that came in, Allen Hastings was the lowest bid of the 4. It is slightly above what we had estimated, and Tim's going to speak to some of that, but it is by a manageable amount. And I was happy to see the number that was there. It's a good number to move forward. That's about all I'm going to go into. I think at this point, ultimately, we're recommending the board accept the bid from Allen Hastings and looking at the experience, the tender bid, everything very good for them. If it's up to the chair, of course, if you wanted some questions on this part now, we could take some, but anything that, of course, it's going to deal with sort of the financial aspects, we probably wait till our 10 on. I can stay here as well.
Certainly. Do you want to go ahead, Tim, or do you want to take questions now, or do you want to go ahead?
If the board has questions about this expression in their mind, that makes sense, but.
Does anybody have any questions for Ian? Vice Chair Kivik?
Why don't you ask, member?
Oh, sorry, Member Barber, didn't see you up there.
Has balloons going up, so.
I don't know how I make the balloons happen. Maybe is this what does it? I don't know. Yeah, thank you through the chair, and I'll put it to staff with whether this question is best answered now or following Tim's remarks. But the comments in the report around new information around the roof and the skylight issue, changing the budgeted amount. I wasn't sure whether that reflected information that we heard in a previous meeting or whether there was new information after subsequent site visits since we last gathered. But I was interested in more information about the particulars there.
I'll get into that, Member Farmer, through the piece that I'm gonna go over with the finances, so that's all right.
Vice Chair Dubik.
Thank you. Just wondering if you can provide a little bit more color around Allen Hastings, maybe just in terms of, where they located, a little bit more about reputation, have we dealt with them? That'd be helpful. Thank you.
Yep. Alan Hastings, I believe their main office is, Chesley as well. It's there as well. So they do quite a few local projects. Even talking about standing. Some of that foundations, there's been quite a few projects that the Lions have. They've done a lot of similar size sort of projects that they're a general contractor. So they're used to this type of having some grades as well. The experiences I've had with the design team, that all been good references that check holds. There was nothing negative that came from it.
Great. Thank you.
Anyone else? Just curious, in that standard 10% holdback, or what was there a holdback in them?
That would be with the contract.
Yeah.
I can't say. Sorry.
Okay. Okay, not seeing any other questions for Ian, then let's go to Tim's presentation on this. And we'll go to. Perfect.
So as Ian mentioned, we had 4 bids with varying construction cost amounts. We are recommending Allen Hastings, who was the lowest bidder. And that brings us in for construction costs, including the rebatable portion of the HST at about just shy of $2.5 million. So this is the actual costs are detailed in the staff report. That does not include the roof, the skylight, or the contingency. So the 2.44 doesn't include tax, but the 2.48 does. But we knew this going in. So we had chosen earlier on, we mentioned this to the board, that we were going to extract the roof portion because our cost estimate that we had done the Class B costing brought the roof skylight in around just over $350,000. Talking to roofing contractors, we got better prices than that. So we wanted to keep it out of the contract so that we can handle it that way. So the roof itself, we had a quote that was about $100,000 less than the cost estimate we brought in. And the skylight turns out that is very expensive if you have to replace it outright. So we have a contractor that's looking at it, and hopefully we're hopeful that we can just change the gaskets and the caulking and leave the frame and the glass the same. And so that should bring the price down substantially. So we budgeted $22,000 for that part of the project. So in the breakdown, you can see some of the other items there, the non-refundable tax portion. So similar to a municipality, we do get the GST back, and we get most of the PST back as well, but some of it we do still have to pay. We've set a contingency of about 10%, so $244,000 as our contingency. We're hopeful that we don't have to use the contingency, and we're hopeful, given the nature of the work on this building, that there shouldn't be many surprises, because the project does include removing pretty much everything inside anyway. So it doesn't leave a lot. So it shouldn't, but we have it there to be prudent. We have some costs in for furniture and fixtures after the fact. obviously the offsite rental costs that we brought to the board last month, I believe, or the month before to get approval, and we do have that at least now, and we're in there. Moving costs, which includes the cost of the actual mover, shredding or destroying of some documents that as we've been cleaning out the office, we want to make sure that we're not moving the old back into the new afterwards if we don't need it. And so we're taking this opportunity to purge a bit. And then our IT costs in terms of making sure that our office is fully functional at the other end for the time that we're away. So those are the total costs, and that brings us in at just shy of $3.1 million total cost. We did apply for an accessibility grant in the amount of $125,000. We were successful in a portion of it. So we received a $13,000 grant, so we're very grateful for that. It's obviously a fraction of what we applied for, but it's still every little bit helps the project. And so that grant goes towards, you correct me if I'm wrong here, but as you come into the new addition to the building, there'll be 2 sets of accessible doors because there's a vestibule. The grant covers the first set of accessible doors. So that's fantastic. We will be reaching out to Community Foundation Grey Bruce later in the year when they have their capital granting open to see if we can secure some additional funding, and they grant up to $35,000 for that. Unfortunately, we're not eligible for trillion funding through the province. So with the after-tax rebate portion of about $3.08 million, this is about $200,000 higher than we were initially budgeting for based on the cost estimates that we had. But that, all in all, is still really good in terms of coming in close to target or nearly at target. So what that means for us is we were planning to pull about $875,000 from our reserves. We'll be looking to pull about $1 million from our reserves instead to help cover the cost of this. And we were looking to borrow $2.1 million, or rather $2 million over a 15-year amortized period. We'll be looking to up that to $2.1 million, which should have minimal impact on our participating municipalities in terms of payback. I think it equates to about $9,000 over the course of a year. And then that's obviously spread across the municipalities based on the portion rating. So we did, as we looked to borrow the money, we reached out to 4 institutions to have discussions about borrowing. The first that we reached out to was Infrastructure Ontario, and those initial discussions were very, very promising. But then communication became very difficult, and we had incredible challenges just getting hold of staff. And ultimately, 15 to 18 months into that waiting period, they got back to us to tell us they can't actually lend to conservation authorities. So that was, unfortunately, that was wasted effort. But we did have some other things in the.
I think they know.
It was good. So we had some other items in the queue, and so there are 2 banking institutions that we currently do business with, and we reached out to each of those to see what lending would look like. For one of them, one of them came back with quite a complex lending proposal. And not very favorable rates. So the rate that they offered us was prime plus rates. So prime plus 1 during construction, prime plus 0.75 following construction. That, given the nature of the business that we're in and the way that we work with our partner municipalities, that's very difficult for us to budget, not knowing how the market's going to fluctuate over that 15-year period. So we didn't proceed with that one any further. The other institute that we bank with regularly offered us a much more favorable rate of 4.26% for a 5-year fixed rate. That was pre-screening. And so we had the option of going through the formal credit check and the formal screening, paying a fee to do that. And that was reasonable. But the challenge for us, again, is we don't know where the market's going to be at in 5 years. And we're looking at renegotiating at 5 years and at 10 years and seeing, how does that impact levy and how does that impact our ability to fund this project? Big unknown for us. So we also didn't move forward with that one, but kept it in the wings as a fallback option. Where we did move forward and have moved forward is with the city of Owen Sound. So in our early discussions with senior municipal staff in each of our municipalities, city of Owen Sound pitched this as a possible idea that the city could front end us the money and then we would pay them back over the amortized period. So we've carried that discussion further. At a staff level, we've worked on negotiating an agreement to this effect. Senior city staff have brought this to city council for initial approval to come back with a bylaw and the actual lending agreement for the mayor and the clerk to sign. And so what that looks like is the city front ending us. They had agreed to 2 million. We've discussed with 2.1, which would have to go back to council. Lending us that money at a 4.2% lending rate to be paid back over 15 years. With interest, obviously, and the opportunity to pay back bulk payments if we have that opportunity to do that, which is something IO or Infrastructure Ontario would not allow us to do. So I think ultimately, all around, this is a really, really good option for the authority, for the city of Owen Sound, for all of our participating municipalities, and for the general public. Because what it does is it lets the city know that they have a secured source of income, a known source of income at 4.2% over that period. So they don't have to worry about what their investment is going to do. For us, obviously, we can budget for that 15-year period. We can let our municipalities know within a great deal of confidence and slim range of movement what that cost is going to be annually for the 15-year period. And then it also ultimately saves our participating municipalities money, and that thereby saves the general public money. So when we look at, if we think about interest rates over the last 25 years, I would suggest that we have had really great interest rates as a borrower for the last 10 years or so. But I would suggest also that rates have been on the wrong side of 4.2, a lot more than they've been on the right side of 4.2. So I think this is a fantastic opportunity, and the motion or the recommendation to the board today is to move forward with this option as a borrowing option. So in the staff report, you can see the breakdown of the costs, both before the HST rebates. It was essentially just this cash flow item. And then after the HST rebate, we received that rebate, we submitted it and received it quarterly. So we think we're in a good position to keep that funding working from a cash flow perspective. You can also see the reserves that we're proposing to pull that $1 million from and what the breakdown, so the status of those reserves at the end of this year based on what's in the budget, not including the building, and what the drawdown would look like to each of those reserves. So through you, Mr. Chair, I would welcome any questions that the board may have.
Thank you, Tim, and Ian, for all the work that you've done on this and staff. It is good, it's really great. Thank you. So I will throw that open question for either Tim or Ian on this subject. Anyone? Member Bell.
Chairman, the CAO, we're talking about drawing $1 million from our reserves. Is that complete?
Does it completely, you mean? No. Well, no, I mean, so what we see here on the chart on page 3 of the staff report or page 51 of the board package is the status of what these reserves would be at the end of 2025 if we were not doing the building. So including other capital and that we have in the budget already. And so you can see from the admin reserve, it would draw down to about 40% of that would be drawn down. From forestry, we'd be drawing down 60 to 70% of that. And from the lands reserve, we're drawing down about 75%. Yeah. So the lands reserve has been the fastest growing of our reserves over the last couple of years. We've done very well with our parking revenues, and that's been replenishing itself at a rate of about $80,000 to $100,000 a year. And so I think that even when we look at our 10-year needs for our lands capital, I think we're still in pretty good shape.
Okay, thanks.
Member Day.
It sounds great, and I was wondering if you could elaborate on the risk mitigation measures that are mentioned in the report in terms of in the event of a default, what would happen?
Oh, in the city's report?
Oh, yes, and on our part too, like just, what are the things that could go wrong and how are we? Like, if we default, it would come out of our, if you could just elaborate on it, that would probably be better than me muddling my way through this, in terms of risk for, mostly for us, but also from the city perspective, because I think relationships are really important between municipalities and conservation authorities, so I wouldn't want to do anything that would damage
Absolutely.
our relationship.
So first off, I would suggest that the risk is very big. So the project is $3.1 million, all in costs that aren't construction costs. We're covering about 33% of that cost. So it leaves about 66% of the total cost for the loan, and that'll be getting paid back annually. The payback on that is based on levy collected from our participating municipalities. So that was presented to municipal councils last fall. It's already included in the 2025 budget, and that levy is being paid now. So that portion of the levy is not expected to go up. It can fluctuate between municipalities based on modified current value assessments. So Triple Plus might go down a little bit, and Fruit might go up a little bit. Those are examples, not bad. Worse. But the total number doesn't change. So it's $190,000 a year. That doesn't change. So that risk is very low because that's a known source of income. So where the risk lies is if a municipality defaulted on paying us or appealed that for some reason. Now, I can't see an appeal coming forward for that in future years. I think that's highly unlikely. It's not impossible, but it's highly unlikely because it's not changing. The other risk for both parties is changes to driven by the province. So would the province change something so dramatically that it cease to exist? I don't think so. But in that case, if it were that dramatic that we cease to exist, our surplus within the organization on the books is about $10 million. In reality, because that surplus is mostly based in our lands and that those lands are counted as the acquisition price, but the actual surplus value of our lands is, I can't guess it, well over $100 million for sure. So then the risk to the city, I think, becomes very low because they can get their $2 million back. Now, on a shorter term risk consideration, the way it's been written into the report that senior staff of the city brought forward to city council is that if we defaulted, say in a given year, that the city would deduct that out of the levy amounts that they're paying us. And so we would have to then absorb that cost. But if we're in a position where we're defaulting, I think there are other things within the organization that we're already looking at and considering that how best to put this. Like if we're in such a position that we can't pay $190,000 a year to the city collectively from 8 municipalities, there are bigger things going on in the organization that are going to require other restructuring. So I think the risk is very, very low. Those are the mechanisms that we recover it from the perspective of the city.
May I ask a comment?
Sure.
In one page in right on my book, which one, it talks about another conservation authority municipality that have done this already. Is that the one example of that in Ontario? Or it's just an example of it?
Yeah, it was the best example. So we were able to, through talking with other conservation authorities, we found several examples. Not all of those conservation authorities were able to get their hands on the documents that we wanted to see because some of them were older examples. I think we got our hands on about 4 different examples. So Niagara Peninsula Region Conservation Authority and Niagara Region, Halton Region Conservation Authority and Halton Region. There was one for the city of Ottawa, and then the one that we used was Mississippi Valley Conservation, and I can't recall the name of the municipality out that way that they worked from. But that was the best example or our situation where it's a straight, we're going to loan you this money and you're going to pay it back with over a period of X number of years. So that's the one that we used as the example. But no, there is precedence throughout the province.
Thanks.
Any other questions? Seeing none. Okay, thank you very much. And thank you Ian, and for the presentations. So with that, then I will put forward two motions. First, whereas the GSEA Board of Directors, the GSEA Board has provided ongoing direction to staff to move through the concept design, schematic design, detailed design, and construction tender stages and proceed to tender the administration building project. And whereas GSEA staff issued a tender for general contractor services to complete interior alterations to the existing office building and construct a new entrance addition to the administration building. And whereas the tender was issued on February 10th, 2025 and received 4 bids. And whereas the tender results were reviewed with the building ad hoc committee to provide the following recommendation: that the GSEA Board of Directors award Allen Hastings Limited the contract for the GSEA Administration Building Renovation Project. May I have a mover and a seconder, please? Member Winter. And what was nice over town got involved in it, I think Member Farmer. All in favor? That's carried, yeah. Thank you. And then point B, whereas the GSEA Board of Directors has approved engaging a contractor to undertake renovations of the GSEA Administration Center, and whereas GSEA staff have secured appropriate funding through a combination of reserves and a long-term loan, that the GSEA Board of Directors direct the GSEA Chair and CAO to negotiate and sign a lending agreement with the City of Owen Sound for GSEA to borrow $2.1 million to be paid back over 15 years at an interest rate of 4.2%. And that the GSEA Board of Directors approve an increased draw from reserves for this project to a total amount of up to $1 million. Again, move in the seconder, please. Member Gregg and Member Shaw, all in favor. And that is carried. Thank you. Excellent.
So,
Yeah.
thank you, through you to the chair. I guess at this point in time, I mean, we had a great ad hoc committee meeting there last week. And when this proposal with the City of Owen Sound came up to fund, I think I would like to put a motion for the board, actually send a letter of thanks to the City of Owen Sound. I think that does a wonderful thing as a relationship builder, but I think it sets all the lower tier municipalities with a guaranteed 15 years what your payback's going to be. So I kind of looked at the ministry for where I would put new business in or a new motion, but I really think that's something that the board should consider.
I think that's an excellent suggestion. Can I get a seconder for that if we're going to make that official? Member Shaw, all in favor? And that's carried. Thank you very much for that, Ben. That's a great idea. All right, moving on to business point C. Whereas the Sauble Conservation Authority is the fee simple owner of the land known as Old Baldy Conservation Area here in Old Baldy in the municipality of Grey Highlands. And whereas several property owners have a vested interest in securing a parking arrangement on GSEA's Old Baldy property to accommodate parking for their personal residences. And whereas upon previous Board of Directors resolutions, staff have been directed to collect parking fees and sign agreements to allow overnight parking for these residents. That the Board of Directors direct staff to permit residents to park in the Old Baldy parking lot in the winter and at night without any fees, subject to a signed written agreement satisfactory to the GSEA, and that the CAO be authorized to prepare and sign such an agreement, and that the GSEA investigate entering into an agreement with the municipality of Grey Highlands to absolve GSE of any liability arising out of the plowing of the parking area and the conditions of the parking area associated with this use. I'm just going to put that on the floor. We're going to move over to the seconder and then begin a discussion. Member Shaw and Vice Chair Giwick. I'll turn it over to Tim. He can give a little elaborate and we can have some discussion.
Absolutely. So the board will, I hope, remember staff bringing forward the Old Baldy parking lot on a couple of different occasions. So first time it came forward was a motion from staff to recommendation rather from staff to set up agreements with the residents adjacent to the Old Baldy property in the old Baltic parking lot to enter into agreements with a payment of $500 per year to Grace Sauble to allow or at the old Baltic parking lot at night in the winter because these residents don't have winter access to the properties. There are 6 or 7 residences there. We did that. It wasn't really well received at the time, and it was a bit of a struggle. So the first year we did collect fees from a number of the residents. The second year, the residents went to the municipality of Grey Highlands. The municipality agreed to pay the fee for that year. The third year, there was confusion over who was paying, and GSC did not get paid. In the fall of 2024, we came forward to the board of directors with a series of options about this parking lot, ranging from no fee, but an agreement, modified fees. I think there were 2 options for modified fees or status quo. Board chose the status quo option. Again, this has not gone over well with the local residents, but more importantly, it was not received well by the municipality of Grey Highlands Council. One of the goals of our organization, and certainly one of my personal goals as the staff head of this organization, is to improve our relationships within the community and especially with our member municipalities. And I feel that this issue has become a thorn in the side of the municipality, and I feel that it is toxic to the relationship between Grey Sauble and the council and the municipality of Grey Highlands. So in addition to that, it's taken a lot of staff time to deal with this. And staff do not have the capacity to plow this parking lot for the residents should the municipality not plow it, nor do we have the staff capacity to be going to this parking lot at night in the winter to see who's paying for parking and who's not enforcing. So I'd like to bring this for the board again, and I would like to recommend to the board of directors as Chair Uri that we move forward without collecting fees from these residents, and we allow that to occur, and hopefully this issue generally goes away. I do think that we still need liability agreements with these residents because they're parking their cars nowhere near their house, really, at night in the winter. Lots of things could go wrong. I don't think Greg Sauble should be liable or responsible for any of that. And then obviously, that's noted in motion. We'd like to move forward talking with the municipality too about also having a liability agreement with the municipality, because again, we are not the ones plowing it. It does no benefit to Greg Sauble for these individuals to be parking here. And so we'd like municipality to absorb some of that liability and we'd like the residents to absorb the remainder of the liability. And yeah, so with that, Mr. Chair, I'd welcome any comments or questions or discussion from the board.
Thank you, Tim. Questions? Wow. Oh, great.
I have one question. This has been an ongoing headache for several years. Why did we not just consider selling the property, the parking lot, to the municipality of Grey Highlands with an agreement that it remained available for parking considerations for hikers, residents, and we absolve ourselves completely of the legal aspect of it? This has went on for years. I just think, I don't know why we don't consider that. I think that makes actually the most sense. That we don't even pay property taxes on it then.
Point taken. I would like to discourage the board from divesting the Conservation Authority owned lands. We worked hard to secure these, and we have other partners that also utilize these areas. And I think it's important that the lands that the authority does own and protect, that they continue to be owned and protected by the authority. And I think an agreement would work better to ensure that we still have control over the protection of these lands. They remain within that NEPAWS or Niagara Escarpment Parks and Open Spaces Park system as part of the greater parking area. And then we also don't have to worry about some possibility in the future where we can't utilize them for what we're currently utilizing them for, which is allowing access to nature.
Just for clarity's sake, I'm only talking about selling them, offering them the opportunity to purchase the parking, not the entire property.
Member Farmer.
Thank you. Through the chair, I note that in the article up above in the agenda package, that reports on the discussion from the council, that I believe it was a staff person suggested that Gray Sauble could simply put up a chain and close the parking lot over the winter. I'm also conscious that that Tim has mentioned that preserving relationships is a priority, but I'm wondering in the context of limited staff availability, that in the same way that so many other GSCA parking areas are closed in the winter, whether we have the capacity to do that. And I've got a follow-up question, but I'll start there.
So kind of a two-part answer, Member Farmer. The first is that the municipality does use this as a turnaround for their plow currently. So allowing the municipality to continue to do that would be a positive thing. If you're familiar with that area and the geography there, if they couldn't turn their plow around, it would be quite a ways to back it up before they could turn it around again. Because they can't go down side road 7B for the same reason they can't go down to plow it. So that would be one concern. The other is that in that council meeting, one other idea that was proposed by Mayor McQueen was expropriating the land from the Conservation Authority, which I personally feel is highly inappropriate. But I think that would open the door to that dialogue as well. I think from a partnership perspective, the best option that I see is allowing the municipality to continue to use it the way they have been using it. And if they're willing to absolve us of liability, and the tenants, we'll call them, are as well, that would be the most positive overall outcome.
Follow-up, John?
Yeah, through the chair, the recommendation, I think that the recommendation seems like the most practical solution to as Member Gregg has said, an ongoing and thorny issue affecting less than 10 properties. I'm concerned that as the report lays out, that from the perspective of the principles that we normally use to govern our properties and access to those properties, that this isn't in alignment with that, and that for the sake of $3,000 a year, when my understanding is that the levy raised by the municipality is 10 times the levy raised by the Conservation Authority, that puts a disproportionate burden onto the Conservation Authority when it is the municipality that is setting those levels of service and deciding that an asset that is owned by another organization is required without the consent or compensation to that other organization, being Gray Sauble, is required to meet the levels of service that they are setting to appease a small number of landowners. I'm concerned about that then being applied in other situations where if, for instance, I'll pick on the Owen Sound climbing community. If a lot of people said, we're just going to climb in the West Rocks in Owen Sound, and we're going to really annoy Owen Sound Council to petition that this happen and to push that, or to camp there, or anything else that would otherwise go against the general way that we set parameters around the use of GSCA property, that this is not something that we would want to set as a way that we do business. And I think that the municipality is in the position of saying they would cover the $3,000, which is cheaper than they would plow the remaining part of the road and more practical than that. And I think the board already made this decision. I'm weary of revisiting that just because the people advocating for the other side are tenacious enough and loud enough that they've fired up other members of council.
To response or you guys? All right. Vice Chair Gibb?
Thank you. So what we have here before us, I think, is a positive way to move forward. And I am supportive of it. I do sit on the Sauble. I sit on Sauble board, and I sit on Grey Highlands Council. And you know, the varying extents of Grey Highland Council members could also vary. Anyways, you know, if I do have my history correct, Grey Highlands did originally, I think, gift for that parking lot to Grey Sauble, or for a very nominal, you know, maybe $1 or whatever that was. And there, you know, in history, there was a handshake agreement that, you know, there would be some, you know, ability for, you know, for a parking allowance. Now, that was never put in stone. You know, these are, you know, sort of these conversations that get passed along within history, and we know where that goes. You know, as, you know, is it fair for, you know, Grey Sauble board to, you know, to ask for payment for use of their parking lot? Yes, it is. And, you know, I will say there still is a case for, you know, what is before us. You know, I think there has been this three-way conversation going since I started this term. I think the delegation from the residents of that road came before us for my first meeting as a counselor. And so we've been having this conversation even before, you know, this present term. You know, Grey Highlands does plow that parking lot. And so there is some value there received. And I think just going forward, I think, you know, in terms of maintaining positive relations, et cetera, I think, you know, to member farmers' comments, I think, you know, our history is a little bit different than, you know, saying the Climbers Association come and want to use the parking lot for free. I think this is a different type of history, and I think there's a different relationship. And I think we also, Grey Highlands does also provide the service of plowing as well. So I'll leave it at that, but I do support what's in front of us today. So thank you.
Just as a point of clarity, Grey Sauble did purchase the property in public sale, private sale, not from the municipality. But when the parking lot was expanded in 1998, the township of Euphrasia provided the fill for that.
Okay, thank you.
Okay, any other questions or comments? If I may, just for my own knowledge, is this one of the parking areas that we charge revenue on, or parking rates during the summer?
Yes, it is.
So we do get revenue. In the wintertime, we don't maintain it. There's no revenue coming in, so we're not really losing revenue in the winter months. I like the thought that Grey Highlands should pay a little bit. They're plowing it. There's something there. But in the agreement, is there something that we can negotiate where some of the maintenance that Grey Sauble normally would incorporate through the summer months, as a pothole filling or a load of gravel or something like that, incorporated into that agreement? I think that would be a little bit more palatable, that Grey Sauble receiving something for the benefit of everybody and everybody's use when they're not using the parking lot, and it's kept in a safe and stately manner. You know, again, I get the relationship building and everything else, and when I read that, that's the easy way out to keep everybody happy. Still maintain it, that it's public use, it's still there. You know, Georgia Bluffs over the years, you know, the parking lots, Bruce Caves, things like that, we're inundated by the plow operators and the users of those trails. Let's start plowing these parking lots. Let's start plowing them. So you have a parking lot that's actually plowed that people can do winter activities, I think is important. You don't do it at the Spirit Rock, you don't do it at Bruce Caves. At least there's somewhere. I think it's a win-win. Every day.
I'm finding myself amenable to agreeing with this motion today, but wary of the original justification for agreeing with it in terms of what Member Farmer was talking about in terms of persistent voices who really want something to change, even if it might go against what against the spirit or mandate of the Conservation Authority. So I think in terms of access, people do benefit from having a safe place to park, most notionally in wintertime, which is a benefit to all folks who visit and live in the area. And yeah, I think there's good points in relationship building as well. I just want to strengthen add support to that idea of long-term decision making, making sure we're doing it for a variety of reasons and not just if a small group of folks raise their voices about one thing. I think we need to look at all issues from a variety of perspectives.
Increased value. Member Bill.
Thank you, Mr. Chair. So on parking lots in summer, this organization pay for putting down gravel and things like that.
Yes, we do.
We have, I'm unfamiliar with this spot. We have garbage pickup, or is that Great Highlands that puts that in?
Gray Sauble would do all the maintenance.
We do that also. Well, I would say then for $3,000 of lost revenue, we absolve ourselves of liability, take $3,000. Because basically a non-issue, my life. Issue could be bad. So the reason why I asked about graveling is because of what was said there, just getting rid of a parking lot. Size of it, speak to yourself, relinquishing property that we want to obtain. That's why I asked about ongoing maintenance and upkeep. So, support.
Anyone else? Okay. In a while, Valerie, remind me if I had to move it in a second or for that motion. Thank you very much. In that case, I will put it to the vote. All in favor? And that is carried. Thank you. Point D under business. So we will have Allison discussing this topic. Personnel policy update.
Yeah.
Stale.
I think this is the last one. So when we did our personnel policy update and we came to the board with the update in October and again in November, there was one other section in the personnel policy that we had not changed the wording from the personnel policy that's been. And that is section 10.1, the inclement weather, addressing the fact that when we have bad weather, employees were staying at home and getting paid, the office was closed. In this area, of course, we have all kinds of days where plows are pulled off the roads and it's not safe to travel. And during COVID, we all worked from home. Very simple, make the investment of enabling people who work at home to work. So most people have either a laptop or a separate workstation in their house. So the proposal is to change the wording from people getting the day off as opposed to they need to ensure that they take their home and work from home as they're still working.
Okay. Thank you. Any questions for Allison on this? Seeing none. All right, I will then move that whereas GSEA's updated personnel policy was approved, accepting section 14.1 be read at the October 23rd, 2024 board meeting by motion FA-24-092 and at the November 27th, 2024 board meeting by motion FA-24-106. And whereas GSEA management has noted the need for an amendment to the policy, that the GSEA board of directors endorses the change to section 10.1 increment weather inclement, that's, I'm reading what I'm seeing, inclement weather of the GSEA personnel policy as detailed in the attached document. May I have a mover and a seconder, please? Member Farmer, Member Shaw. Thank you. All in favor? And that is carried. Thank you, Elsa. Quick. All right, moving on, then move to CAO report.
Yeah, a couple of things to talk to the board about and update you on. So firstly, our March break day camp. So we came to the board with a recommendation to about our March break day camp. Anyway, the numbers were a little bit lower than we had hoped, but the camp overall was a success. We were able to have 2 youth attend free of charge thanks to a subsidy from one of the local elementary schools. So when our staff reached out about providing a subsidized program, they also have a subsidy and we're able to cover that. Campers enjoyed activities like hiking up Douglas Falls, bird watching, animal tracking, fort and fire building, and delicious campfire snacks, because those are the things that kids love to remember. And importantly, it was a wonderful opportunity for kids to be out connecting with nature, and we've received very positive feedback from parents. So overall, a great success. We're going to continue this in the future, I'm sure. And I think it becomes a regular mainstay in people's minds as a March break item. Attendance, I would expect, will increase accordingly. As you probably have noticed, the snowpack has gone down substantially since about a month ago. So we did have a substantial amount of snowpack on the landscape throughout this winter. Typically, we get a thaw midwinter. We did not get that this year. We had a lot of snow. Our team goes out regularly to check the water content in that snow so that we can use that in our flood forecasting models. This year, we had between 4 and 8 inches of water equivalent in the snow, and we lost a big portion of this within a 3-day span in mid-March. So on March 13th, our staff issued a watershed condition statement, which is essentially a heads up that that the information that we have is that there's warm weather because of the snowpack, and also that we might get rain. So be aware of this, and it's most important for our municipal partners. So I hope that your staff did receive that. Appreciate that. On March 15th, due to the extremely warm weather and the quick loss of snowpack, we issued a flood watch. So this means that flooding is imminent, and the only next step beyond that is flood warning when flooding is happening. So we were fortunate, though, that most of the rain missed us. So we did have issues noted of localized flooding. Some roads flooded, some parks, Harrison Park, if anybody saw it, did receive the impacts of that. But certainly we were spared the worst of what it could be if we had rain on top of that. So anyway, I wanted to just to bring that to the attention of the board. I do believe that you received the warnings and the statements and so on, and your staff do as well. And we try to keep that on with your team to make sure that that they know what's coming, they know what's happening, and also there's a feedback loop to us so that we know where. We have a tree sale, our annual tree sale coming up in May. So it's currently scheduled for Saturday, May 3rd from 8 until noon. Similar to last year, there'll be seedlings and landscape trees available for purchase. This is always very, very popular with the public. Anybody who's been to it will know that. And as always, more hands make for lighter work. So if anybody is willing to volunteer to come out, it's a great morning, a great opportunity to talk to the community and get some fresh air and sell some trees. So if you're interested, you can reach out to me, you can reach out to Mike Fry, our forestry coordinator.
Can you guarantee no rain?
Yeah, just like last year. Occasionally we get a nice sunny day moving into May. It's a good thing, but address the gas appropriately. And then the final thing that I wanted to mention, is that we had a provincial election, obviously. The Conservatives were voted in again, Mr. Ford and his administration, and the administration has set a new cabinet for themselves. And as part of the media release that went out, there was a note at the bottom of it that says conservation authorities will now be under the Ministry of Environment, Conservation and Parks. So this is new for right now. It's not the first time this has happened. So when the Ford administration came in 2018, we were, the Ministry of the Environment became the Ministry of the Environment, Conservation and Parks, and conservation authorities were predominantly moved into that portfolio for the first time in 70 years. And what that meant for us at the time is that all of our programming went to MECP except for the planning work that we do with the natural hazards work, so the regular planning and regulations work. And we reported to the Minister of MECP. We don't know what it means this time because we have not received any direct correspondence from the province or either ministry at this point. The only thing we have is the release the province put out that has that footnote at the bottom. So we're waiting to see what that means, but we presume that it will be similar to the last time. And so we will have a new minister to Todd Garden. And then M&R also has a new minister. Minister Smith has moved to a different portfolio, and M&R has Mike Harris Jr. as the portfolio manager, the minister there. So that is my report, Mr. Chair. If there's any discussion or comments, I'm happy to talk to those.
Any questions, Member Shep?
Just, I guess, two comments. My nephew did the archery camp and had a wonderful time. He loved it, and I think they're looking forward to being able to participate in future day camp programs. And had rave reviews for Logan, so I really enjoyed Logan. And the flood, I thought the flood notifications, the statements were just excellent. A neighboring conservation authority whose watershed I live in did not update their statement until Monday when the water was already across the road in Paisley. So I kept checking over the weekend, anticipating that we would see, similar notifications, and there weren't any. So just hats off to the team on keeping that updated and getting that out there. I know we heard a lot of dialogue, and questions and, concerns from people over the last month as to what was going to happen to all this snow and what the flooding, what the melt was going to look like. So I thought it was, really, John's emails were really informative and super helpful to be able to relay that to residents. So that's all.
And I will, probably help me with sort of a frying pan into the fire that we just some staff were on vacation and but yeah, look after this.
Yeah, great job.
Member Farmer.
Thank you. Through the chair, I'm curious whether Tim or the chair and vice chair have plans to meet with the MPPs from our own watershed, given the results of the election, knowing that not everyone currently representing the ridings here will be as familiar because some of them are new.
It's interesting you asked that because I did discuss this with Tim before the meeting, because I also saw the change and I wanted to talk to Tim about kind of where this was going to go, asking whether Conservation Ontario, how involved they were going to be, because as the overriding body, it makes sense that they'll be reaching out. But to your point, we need to, one thing Meaford has the advantage of now, for a change, we've never had the MPP before, and we're hoping to maybe back channel a little bit through Mr. Vickers in that regard, use that way in. But we should be utilizing every avenue we can to approach the two parties, and again, in concert with Conservation Ontario, we should be doing it through the proper procedure. we need to find out exactly what they're going to be doing. But we should be doing everything in concert and supporting them in their endeavors, so yes. You know, that,
Yeah. So Conservation Ontario will be reaching out directly to the Minister of Environment, Minister of Natural Resources. But again, this is very, very new. So we don't have a plan there yet. I will be planning to reach out to MPP Vickers. I have reached out just to congratulate him on his new role, but we'll be reaching out in the not too distant future to set up a meeting. We do have obviously, or it's not obvious, it's changing forward, but we do have the nice benefit that MPP Vickers does know quite a bit about our business because he sat on our board for several years. So that's a nice item. It'll be good to talk to him and talk to him about our concerns and also to have that feedback loop from him about concerns that he's hearing in the community and how we can possibly address those.
excellent. Anyone, Member Perry?
I would just say, if you haven't paid the $1,000 for the stewardship invoice yet, just hand deliver it, because it's in this agenda. Paul's benefited and taken part in the stewardship work that the CA's done for several years too, so hand deliver the check.
Anyone else? Okay, again, in my report, I was gonna bring up that as well. Thank you, Tim, for that governmental change. The only thing I was also gonna just say, thank you, Ian and John and team, for the exemplary work you did on that. Yeah, we did receive all the reports, and it was great information. It was very, very helpful. Thank you very much. So, but there is no closed session today, so before we report out and adjourn, stay tuned, as we will be going to, following the meeting, we will then be having Carl join us for the Great Sauble Source Protection Authority meeting. So I will ask Valerie, we technically have on there 3:45 start time, or we just gonna go this 15-minute break? Good. Good to say. So let's take 10 minutes and then we will reconvene. Oh, no, we won't reconvene. We will start a new meeting. I'm sorry. So at 3 o'clock, we will have that meeting. So thank you very much. And with that, I will adjourn this meeting. Thank you.